Welcome to today's market report. European stock markets traded higher on Wednesday, rebounding from their worst daily loss so far this year, boosted by strong corporate earnings, which have calmed concerns about the march of COVID-19 in India. DAX in Germany traded 0.5% higher, CAC 40 rose 0.6%, FTSE 100 gained 0.5%. The pan-European stock 600 climbed 0.6% after dropping nearly 2% on Tuesday. Tech stocks were the top gainers, with semiconductor equipment maker ASML stock climbing 4.8% after it raised its full-year sales forecast to reflect the plans of major chip makers to increase capacity and address the current global shortage. Smaller rival ASM International stock rose 0.6%, while Ericsson stock slipped 0.7%, despite the Swedish telecoms company beating first quarter profit expectations, helped by sales of 5G equipment. Heineken stock rose 3.5% after the world's second largest brewer's trading update pointed to better than expected beer volumes for the first quarter. Kering stock rose 0.4% after the French luxury group's leading brand Gucci returned to growth, and Roche stock rose 0.9% after the Swiss drug maker confirmed its guidance for the year despite a small drop in sales. On the flip side, Akzo Nobel stock fell 0.8% despite the Dutch paints company reporting a 90% increase in first quarter profit, while announcing a $1.2 billion share buyback program. The stock has already hit a series of record highs this year as its paints and coatings business gained momentum and market share. Juventus stock slumped 10% after the breakaway European Super League, of which the Italian soccer club is a founder member, was rocked by the departure of its 6 English clubs. Concerns remain that record coronavirus infections in India and the reinforcement of travel restrictions will act as a brake on the global economy. India, the world's second most populous country, reported its worst daily death COVID toll on Tuesday from the world's highest number of new daily cases. This has led to the imposition of a 6-day lockdown throughout much of the country, as well as many countries putting India on their banned travel list. Back in Europe, UK consumer price inflation rose 0.7% on the year in March, slightly below the 0.8% expected, illustrating that the Bank of England is under no immediate pressure to tighten its ultra-easy monetary policy. Oil prices weakened on Wednesday, heading back some of the year's strong gains as concerns over a rise in the number of COVID-19 cases in India and a surprise build in US crude oil supplies renewed fuel demand worries. US crude futures traded 0.2% lower at $62.52 per barrel. Brent contract fell 0.6% to $66.40 per barrel. Both contracts are up just short of 30% in 2021. Gold futures rose 0.2% to $1,781.85 per ounce. On the FX front, the GBP-USD pair traded with a mild negative bias throughout the early European session and was last seen hovering near daily lows around the 139.20 region. The pair extended the previous day's retracement slide from multi-week tops levels beyond the key 140 psychological mark and edged lower for the second consecutive session on Wednesday. The intraday downtick, however, stalled near the 139.15 region following the release of UK consumer inflation figures and held bullish traders from placing aggressive bets around the GBP-USD pair. This comes amid renewed fears about another dangerous wave of coronavirus infections in some countries, which continued lending some support to the safe haven dollars. This was seen as another factor that capped gains for the GBP-USD pair. However, a combination of factors might keep a lid on any meaningful upside for the greenback and support prospects for the emergence of some dip buying around the GBP-USD pair. Investors now seem convinced that the Fed will keep interest rates low for a longer period. This, along with the recent sharp decline in the US Treasury bond yields, should act as a headwind for the buck. Hence, it will be prudent to wait out in the near term. Bearish traders might wait for sustained weakness below the 139 mark. Euro-dollar has extended its recovery further than expected after holding the 39.2 retracement of the 2020 to 2021 uptrend at 116.95, clearing the relative ease resistance at 119.90, while the dollar index was 0.1% lower at 91.175. This is today's market news. Thanks for listening. We'll see you next time.